Hi, welcome back to the channel. In today's episode, I want to talk to you about what's happening in the Russian economy and specifically to talk about how the continued strength of the Russian ruble is having a damaging impact on Russia's economy. Now, that might sound counterintuitive because I'm sure you've heard me say on multiple occasions that the old adage is that if your currency is doing well, then that indicates that your economy is doing well. So you would think that the strength of the ruble was a sign that Russia's economy is booming, but actually it's the opposite. And Reuters are estimating that Russia's tax proceeds from oil are going to be down by 55% in January 26 compared with January 25. Now that is a massive fall in the most valuable form of revenue that Russia earns. And this is all related to what's happening with the ruble. Well, it's not all related to what's happening with the ruble. Some of it is related to the financial sanctions. But let's go through the ruble first, and then we can talk about what's going on with the sanctions in a moment. If we have a look at this chart, it shows the exchange rate between the US dollar and the Russian ruble over the past 12 months. Now, this is inverted. So we're talking about the dollar first and the ruble second. The reason why we're doing that is that when you look at currency charts like this, you always put the stronger currency first. So even though we've got a reduction here, it actually shows an increase in the value of the ruble. What it's showing is that the value of the dollar has reduced against the ruble. And if we look but broadly at the start of this year, the ruble was trading at a level of around about 115 against $1. Today, it's down to around 78. And that represents an increase in the value of the ruble of around 45% over the past 12 months. And if we expand the scale of this chart to show what's been happening over the past 5 years, you can see that the current rate that the ruble is trading at is broadly speaking where the ruble was before the invasion of Ukraine started. The big spike in 2022 here in terms of the fall in the value of the ruble was immediately following the invasion of Ukraine when the ruble collapsed to almost 130 to $1. It then bounced back as the Kremlin stepped in and the Russian central bank started buying rubles in the market to strengthen its value. And at one point it was trading for almost 50 against the dollar, which was the strongest it had been for a very long time. But over the past 3.5 years, we have seen the value of the ruble deteriorating until the start of 2025, when the Russian central bank started buying it again to strengthen the value. So the current level isn't really representative of what's happening in the economy. The reason why you normally associate a strong currency with a strong economy is because it means that the companies in that economy are doing well. They're selling lots of things overseas. Therefore, there is usually strong demand for your currency, which then pushes up the price of your currency. So as your economy does well, there's more demand for your currency, it goes up in value, and so the two move hand in hand. That isn't happening in Russia for a variety of reasons. Firstly, the economy isn't doing particularly well because of the sanctions. But secondly, there isn't a strong demand for the ruble as a result of the fact that lots of people want to buy Russian oil and gas and coal and all of these other things. It's because the market for the ruble has now diminished to such a small level that nobody wants to buy it. So the Russian central bank is basically able to manage the currency value. So it can step in because it's such a small market. It can manage it exactly where it wants it to be. And bizarrely, it's keeping it around 78. And that's actually against the wishes of a lot of Russian companies. Many of the CEOs have come out and said that they would prefer to see an exchange rate of 100 rubles against the dollar. And we'll go through the reasons for that in a moment. Now, just before we go on any further today, could I ask anybody that hasn't subscribed yet to please hit that subscriber button? It doesn't take you more than a second to do, but it really helps me with the algorithm, also puts a smile on my face. And also, I wanted to remind you about the competition that I'm running at the moment, whereby you could win my house, which is located close to one of the best beaches in the whole of England. It's literally a stone's throw away. And you can then enjoy fish and chips down at the beach, maybe a pint of beer, go for a stroll, maybe even do some surfing because you can actually surf on that beach. And this is another way that you can support me and the channel. I've come up with something a bit more innovative than just asking you to buy me a coffee or send me a YouTube super thanks. I'm actually giving you the chance to win a property, get yourself onto the property ladder. But if you're not interested in property, maybe you don't live anywhere near Devon, maybe you live tens of thousands of miles away, you might live on the moon, I don't know where you live. But if you're not interested in that property for whatever reason, then the great news is that there's also an alternative cash prize in any currency that you like of around £250,000. Well, it's actually £250,000, but it's going to be converted into your currency if you don't want it in pounds sterling. So if you'd like to support me and the channel and get involved in this fun competition, please scan the QR code on the screen now. You can do that with your phone. It takes you straight through to the link and you can get some free tickets when you buy some, or have a look in the link in the description below, which I've also pinned. So thank you for your time. Thank you for supporting me in this new idea. And let's get back to the video. Now, in terms of looking at the performance of the Russian ruble, Bloomberg recently announced that it was the 5th best performing asset in the world in 2025. Now, this excludes the stock market. So I'm not talking about one particular stock that may have gone up like 100 times in value because it's AI related and all the rest of it. We're talking about long-term assets that you can invest into quite easily. This is the table that shows the best performing assets in 25. You can see that right at the top doesn't get a lot of coverage, but platinum has been the best performing asset. It's up by 170% in 2025, followed by silver, which is up by 158%. Palladium, which is used in a variety of industrial purposes, is up by 90%. Gold up by 72%. I think that probably gets the most press coverage. Gold is always being talked about. People are always saying it's breaking new levels. But you can see that you could have invested into some other precious metals and done better than gold. And then Russian ruble comes in at number 5 on this list. It's up by 45% since the start of this year. So if you'd have bought a load of Russian rubles, you'd be sitting on a healthy profit now. Now, it's not quite as easy as that because most banks don't want to trade in rubles, so you can't just go down to your local branch and say, could I buy £1,000 worth of rubles, please? And also they'd probably get a few funny looks wondering why you were doing that. But I just wanted to show how the ruble has performed this year. And as I said at the start of this video, it's counterintuitive because that doesn't relate to what's going on in the Russian economy. The Russian economy is, really struggling right now. Now, I wanted to talk about what the impact of this strong ruble is on Russian companies. Normally, when you see a strengthening of a currency, what that means is that it's bad news for exporters because it makes your exports relatively more expensive. So we keep the examples very simple. If we talk about at the start of this year, when $1 was trading for 115 Russian rubles, if your product was selling at 115 Russian rubles from Russia, when you go out into the international market, that product would be priced at $1 because that was the exchange rate at that time. Now that the exchange rate is 78 rubles against $1, we would be talking a price of maybe $1.50 because it's gone up by 45%, so maybe $1.45, somewhere in that region. So the same product costing the same amount to produce in Russia is costing almost 50% more to be bought in the international markets. Now, normally that would lead to a huge reduction in demand because if you raise your prices by 50% and the rest of the world isn't, because it's just an exchange rate matter, then you're going to lose sales and therefore you would lose lots of business. So normally when a currency strengthens like this, it's bad news for exporters. And obviously it's bad news for exporters at the moment from Russia's perspective because they're struggling to be able to get sales because of the sanctions. So we've got a double whammy here. And the problem that Russia is encountering is that it's dependent on exports. It's an export economy. It exports significantly more than it imports. So all of that represents bad news for Russian businesses, both from an exchange rate point of view, but also from a sanctions point of view. But if we have a look at what this means for Russian oil companies, now obviously oil isn't priced in Russian rubles, it's priced in US dollars and maybe Chinese yuan and euros, depending on which part of the world you're buying it in. Now, the fact that Russia has seen a big increase in its exchange rate isn't actually impacting on global oil prices because they're set by the market. So the exporters wouldn't actually lose out in theory by an increase in the price of their products because the market is setting the rate. But let's have a look at what this means for Russian companies who are still selling oil to maybe China and India and Turkey, what it means when they're reporting their results back in Russia. So if we take an example of a barrel of oil trading at $60, just to keep it simple, at an exchange rate of 113 rubles to $1, which was pretty much where it was at the start of 2025, that would equate to 6,780 Russian rubles. Assuming a profit margin for an oil company of 25%, let's just say, then the profit on that would be 1,695 rubles. And at 30% tax that you have to pay to the Kremlin, that company would pay 509 rubles in tax on every single barrel of oil that it was selling. If we now look at the situation with the ruble trading at 78 against the US dollar, which is where it is roughly speaking today, so we're just talking about the movements in the exchange rate here, the $60 that you've sold your barrel for translates to 4,680 rubles. So it's significantly less in terms of rubles because of the difference in the exchange rate. And this would be what this company would be reporting in, because all Russian companies have to report their results in rubles. They can't report them in US dollars. The Kremlin won't allow them to. So assuming a same profit margin of 25% per barrel, the profit is going to be 1,170. So that's down by 31% compared with when the exchange rate was 113. So the tax, the 30% tax on that profit would be 351 rubles, which is 31% lower than it was when the exchange rate was higher at the start of this year. So what that means is that Russian companies that are still able to sell oil, that are still managing to find somebody to buy it, are reporting significantly lower revenues in Russia because of the exchange rate, and therefore they are paying significantly less tax. So the increase in the value of the ruble is actually detrimental to all of these exporting companies because they're reporting far lower revenue, far lower profits, and therefore paying less tax. And that's one of the reasons why the Kremlin is facing a 55% fall in its tax revenues in January of 2026. Now, obviously, there are also other factors feeding into that, such as the sanctions, which have really ramped up over the past few months, particularly the direct sanctions that have been applied against Lukoil and Rosneft, the two biggest oil companies in Russia. That's impacting on their ability to actually do business because Chinese and Indian and Turkish companies are pulling back from buying that oil because they don't want to be hit with secondary sanctions. And this is now leading to a huge reduction in the volume of oil that Russia is processing. And one of the factors in the 55% fall in the taxes for January 26 is mineral extraction tax. So a lot of Russian companies are actually taxed at source on the amount of oil and gas and coal that they're extracting from the ground. And that's actually down by around 50%. So the fact that mineral extraction tax is down tells us that Russia isn't producing as many fossil fuels as it was because the demand is lower. It doesn't have anywhere to store all of these products. I've talked about it before that Russia doesn't have anywhere to put that oil. And the oil tankers that it was putting it onto, a lot of them are now just floating around on the sea because they can't actually deliver that oil to the ports they wanted to. Firstly, the buyers don't want it. And secondly, they're now struggling with regards to insurance. And as I talked about in recent videos, Ukraine is actually targeting some of those tankers now with its drones, its unmanned sea drones. So Russia is being impacted in a variety of other ways, not just because of the rise in the value of the ruble. It's also struggling to be able to produce and sell enough oil to actually keep its income going. So what's the summary and conclusion today? Well, I wanted to post this video because I think what's happening with the Russian ruble is really quite interesting because, as we've said many times before, usually you would expect if a currency is doing well, then that means that that country is doing well, its economy is booming, everybody wants to deal with it, that therefore there's increase in demand for that currency. But what we're seeing with the ruble is really quite fascinating because in the course of 2025, we have seen the ruble strengthening significantly. Now, this may be partially down to the fact that President Putin was very unhappy when the value of the ruble started trading above 100 against the dollar. I think he saw that as the cutoff point. And lots of different initiatives were introduced in terms of what Russian companies were allowed to do, how much of their revenue they were forced to translate back into rubles in actual physical currency terms. And so that brought the exchange rate back under 100, and the central bank has kept buying rubles in the markets to keep the price artificially high. Now, there are question marks as to whether or not that is the right thing to do. And what we've talked about in today's video is the damaging impact of the continued strength of the ruble on lots of Russian businesses. And this is aside from what's happening with the sanctions. And we saw the example of the same barrel of oil that's being sold for $60, for example, what that translates to in terms of profit and taxes that the Russian companies are reporting. And given the movement in 2025, we are seeing a 31% reduction in taxes and therefore profitability of these Russian businesses. So that's obviously bad news if you're a Russian company that's selling anything overseas, because you're having to report lower revenue, lower profits, and pay less tax. Now, everybody's happy paying less tax, but from the Kremlin's point of view, it's a disaster because they're living on those tax incomes. So from an exchange rate point of view, Russia is losing out. But in addition to that, obviously Russian businesses are also facing a wave of sanctions, and those sanctions are getting more difficult to get around. Over the past couple of years, Russia has managed to bypass a lot of the sanctions. Firstly, there was the oil price cap, which it was able to get around using the shadow fleet or dark fleet or whatever you want to call it. And it was also able to manipulate the numbers in terms of how much was being charged for the actual oil versus transport costs. So there are lots of different ways of cooking the books to still make lots of sales. The situation is changing rapidly because the USA has really clamped down on these sanctions. And the fact that the two biggest oil companies now have direct sanctions against them makes it much more difficult for buyers to be able to trade with Russia and buy any oil. So that's starting to really hurt the Russian economy. Now, normally an increase in the value of your currency would translate to a benefit for importers because you've got more purchasing power, so imports should be going down in price. And maybe that's why the central bank has done this, to try to bring inflation back under control, because inflation was running at very high rates. It's now started to come down. And one of the reasons why it was going up so rapidly was because of the cost of imports. So a strengthened ruble will reduce the cost of those imports. However, one of the reasons why Russia is facing high import costs is because of the sanctions. It can't go out and freely buy lots of things in the market because it's restricted from doing that. So there'll be a limited benefit in terms of reducing import prices because the sanctions are actually keeping those import prices high. But the overall summary of today's video is that the continued strength of the Russian ruble doesn't tell us that the Russian economy is doing well. In fact, the Russian economy is doing badly at the moment, and the strengthened ruble is making things worse because Russian exporters are having to report lower revenue, lower profits, and therefore pay less taxes. And the benefit for importers isn't really translating into the Russian economy because of the sanctions that are in place, stopping Russia from importing lots of things. So the longer that this situation goes on, the worse it's going to get for Russia. Russia needs to take a step back and say, okay, we don't care about looking good in the international markets. The strength of the ruble doesn't mean a strong economy. It's actually hurting the Russian economy, and we need to let it move to more of a free float, which would mean it would probably go above 100 against the US dollar. It could even go as high as 150. And that would actually have some benefits because Russian exporters would then be able to show higher revenue, higher profit, and pay more tax. But I don't think the Kremlin is on board for that because they still follow the old adage of strong currency, strong economy. Hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. That's what I'm trying to do. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already. Don't forget, I'm running a competition where you can win my house close to the beach in the southwest of England, which is a great part of the world to just relax and hang out and have a beer and some fish and chips. But if you don't want to do that, you can also win £250,000 in cash. Have a look at the QR code on screen now. Take a photo of that with your phone. It'll take you straight through. Or you can find the link in the description below, which I've also pinned. It's another way of supporting the channel, so thank you so much for that. And thank you so much to everyone that's supporting me in other ways. If you've bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a YouTube member or buy me a coffee member, really appreciate that support. Thank you so much. And here's something to put a smile on your face.